Let's get you updated on our grain trade. We'll start with the corn, and our quotes are provided by Bar Chart. Well, as they magically appear behind me here on the May corn right now, they are trading 3.5 cents higher. So they've eased back just a little bit from the open, but not very much. Hanging right in there. We're at 6.50 3/4 per bushel. December is up just a half cent though, and we're at 5.72 3/4 per bushel. Over to the soybeans we go, and they had some big moves earlier this week, and right now they're very quiet. May soybeans 2.5 higher at 14.70 1/4, but November down 3 at $13.75. Acting kind of timid here today. Now in the wheat, that thing just went rocketing higher here about an hour ago, and well, now they're a little more down to earth. We have May Chicago wheat 9 3/4 higher. Check that now, 10 1/4 higher at 7.10 per bushel. That means we have now trimmed off about 14 cents from our early gains today. July is 9 3/4 cents higher. On Kansas City wheat, the May contract is still up 11 3/4. We're at 8.84 1/4. But that's off of its earlier high this morning by about 12 cents. So keep that in mind. And July is 10.5 cents higher. On spring wheat trade in Minneapolis, the May contract is up 9 at 8.91 1/2. July is 10 3/4 higher, and we're now at 8.94 3/4. And we'll go ahead and take a look at the cotton market here. July bouncing around on both sides of unchanged. We're now 14 points higher at 83.11 per pound. December, though, down 22 at 83.06. We're joined by Todd Bubba Horowitz of BubbaTrading.com. He's located in Las Vegas today. And when you look at the way the markets are acting, of course, you have to keep in mind we have a couple of fairly sizable reports coming up on Friday. But all in all, how would you rate their performance hanging in there today?
I think they're doing exactly as one might expect, Marlon. You know, all three, corn, wheat, and beans, all reached short-term resistance after the nice rally the last few days, and you would expect a pullback. You know, the healthiest thing for these markets is, you know, the back and fill, right? Get to a resistance level, pull back a little bit, then break out. And I think that's what we're going to continue to watch here now. Is I think we've turned the corner from the dregs and the ugly bit of the markets, and now starting to look much more positive and starting to break to the upside. So I would expect a little bit of a pullback, and then I would expect to see a continuation, and then your next level, like in wheat, like up at $8 if we can get through that next resistance level, which I think we'll have no problem doing. So it'll take a little time, but I think we're on the other side of the hill now and starting to go downhill, which would start pushing our prices much higher.
So do you think that the commodity funds, or let's just say the large funds out there, have by and large kind of squared up positions now ahead of the report on Friday, or not?
I think they're long. I think they were part of the reason that they kept a lot of pressure on these markets because they were trying to buy, and I think that now that they've gotten in, I think now they're free and clear to run, and I don't think the reports will have much effect one way or the other.
Do you think that Cargill story is going to be much of a factor or not?
No, I think. One thing I think we have to remember about today's markets, Marlon, versus when you and I both started in the antique part of the year's world, you know, that the news is already out. Whatever is going to happen, there's very few surprises. You know, there's the news flow is so fast now that they've already priced in anything that's going to happen from those reports.
Interesting stuff. Well, thank you, Todd, for joining us here today, and we'll check in with you again soon. That's Todd Bubba Horowitz of BubbaTrading.com. He's in Las Vegas today. We'll pause here, and we'll take a look at our livestock market action right after this.